So you're a freelancer. You run your own business. You're an individual. You travel the world. You're a digital nomad. You name it. You have something good going on. And your next step is to enter the US market. That's what you want to do. You want US clients and you want to be able to scale your business or your practice to all new levels and to all new heights. Now, I'm here to tell you, not only can the Rothbard Group help you enter the US market, get US clients, and grow your business exponentially. But I'm also here to tell you, you can do it tax-free from a US perspective if you plan it out right. Hello, my name is Javier Correa. I'm the tax director here at the Rothbard Group, and I'm a licensed enrolled agent in the United States of America, fully admitted to practice before the Internal Revenue Service. Now, I love working with freelancers. Freelancers are really the best representatives of today's digital global economy. In many cases, they are also digital nomads who travel the world, work from their laptops. They have clients all over the planet. And in many cases, they are developing innovative ways to provide services to people around the world. And that's the key, the provision of services. That is what is going to allow many freelancers and many small businesses that actually provide services to actually operate tax-free from a US perspective. Now, let me focus on this for a second. So this is a video for foreign freelancers and investors out there who are not US persons. And this is the key thing here. So if you are a foreign entrepreneur and freelancer, it means you're a non-US person for tax purposes, or in other words, a non-resident alien, somebody who is not a US citizen, not a green card holder, and somebody who doesn't spend sufficient days in the United States to meet the criteria of the substantial presence test. Now, assuming you do not meet any of those three tests that I just outlined, you are a foreign individual for US tax purposes, as I've just described. Now, the advantage of that is that as a foreign entrepreneur, you are only subject to US tax on US source income, meaning that income that is deemed to be foreign source is just beyond the scope of US taxation for these kinds of individuals. So when I'm talking to global freelancers, global digital nomads, people who are providing services through their businesses to clients all over the world, including in the United States of America, the first thing I ask them is, where do you plan to perform your work? Are you planning on working in the United States or outside of the United States? And the answer is, in many cases, they are open to both. And when I tell them, hey, listen, if you actually plan your business in such a way that all of the work is done outside the United States and you are providing a service. So for example, you are an accountant or you're an engineer or you're a web developer, you are a community manager or a marketing specialist, and you're actually sitting on foreign soil, meaning non-US soil, when you are providing those services to your clients in the United States and around the world, the US is going to consider that foreign source income because under US sourcing rules, in the case of services and professional fees, as well as salary, the source of that income is deemed to be where the human is actually performing the work. So again, if you are on foreign soil, let's say you're in Costa Rica or Panama or the Cayman Islands or another tax-friendly jurisdiction performing the work, the United States is going to consider that foreign source income. Now, it doesn't just stop there. Not only can you provide services to US clients from a foreign country or a foreign jurisdiction and have that be considered foreign source income, you can actually go one step further and have an American company. You can have American banking. You can have American payment processing, American invoicing, an American mailing address, and all that will not affect your ability to actually receive income and make it tax-free on the US side. So how does this essentially work when you want to take it to the next level of having a US company to better service, let's say, US and Canadian clients? Well, at the Rothbard Group, we've become real experts at forming corporate structures that work well for these kinds of global non-US entrepreneurs and investors. So in the United States, we have the secret weapon of the US LLC. Now, US limited liability companies are formed under the laws of individual states. So you go to a state like Florida or Wyoming or South Dakota or Delaware to form your entity. So let's say, for argument's sake, we form a Florida LLC, a Florida limited liability company. Now, an LLC in the United States is not a tax category. It's a corporate entity. Now, how the Florida LLC in this case would be taxed is going to largely depend on how we plan everything out for the foreign client that we're working with. In many cases, a Florida LLC or a US LLC in general is going to be either a single member LLC, which can be taxed as a disregarded entity for US tax purposes, or a multi-member LLC, which can be taxed as a partnership for US tax purposes. Now, the beauty of these two options is that in both cases, we're talking about American companies that essentially are not taxed at the corporate level, but whose income actually flows down to their member owners, to their respective member owners. So let's go back again and remind ourselves of what exactly is US source income for foreign individuals that are providing services. If a foreign individual, non-US individual, is providing a service from a foreign jurisdiction, again, Panama, Costa Rica, Cayman Islands, for example, that income is deemed to be foreign source for US tax purposes. If now you add on a US company in the mix, and that American company is the one providing that service, but all the humans within that company, i.e. you as the owner, director, manager, etc., and all of the employees, all of the staff are all located outside of the United States. For US tax purposes, we really don't care where they're located as long as they're located outside the US. Then essentially you're going to have an American company that is generating foreign source income. Because those companies would be structured either as a disregarded entity if they're single member LLCs or as partnerships if they're multi-member LLCs, that foreign income is going to just flow through that American company and going to reach that foreign member owner, which is you. And you are going to pay tax on that money in accordance to your individual rules, or the rules that apply to you as an actual person, as an individual, or the rules that apply to your holding company if you want to own the US entity through a foreign corporate entity. In any case, as long as the owner of the US LLC is not a US person for tax purposes, foreign income flowing through an American company to a foreign owner is not going to be taxed in the United States. And the end result is a global business operation that operates through an American company that processes payments through an American bank that invoices American clients directly in the United States, that uses an American mailing address, that is everything US for all the positive aspects the US can bring, but without the tax burden that is usually associated with the United States of America. Now, in order for this to work, you really have to be mindful of the fact that you really have to perform all tasks and duties outside the United States. I can't tell you how many times I've worked with clients that have that temptation to hire somebody in the United States, to potentially expand their operations to US soil, open up a US office. And opening up a US office can be done. It does create more complexity in the structure, but the important thing is you have to do it in a smart way. Because having US offices, having US personnel, having any kind of dependent agent in the United States that materially participates in the services you are providing, or that facilitates the transaction, or that represents the company, can sign contracts, does sales, or anything of that nature, can create a tax nexus in the United States, which can ultimately destroy your tax-free position as a foreign entrepreneur doing business through an American company. So, is it possible to, as a freelancer, access the US economy, sell to US clients, access the US consumer market, invest in the United States, and grow your business while remaining tax-free? The answer is yes, but it requires careful planning, it requires knowledge of sourcing rules, it requires the right entity election for the respective LLCs that would be formed for that client. It requires proper structuring of the transaction overall, and it requires a lot of discipline on the part of the managing partners, the partners, and the members of these American businesses that would be formed. This is why the Rothbard Group really thrives in developing these bespoke strategic business development plans for clients that want to access the US market, and definitely clients that provide any kind of service like the aforementioned marketing, consulting, engineering, web development, and all of these kinds of things are really in a unique position where they can relatively easily, with a good strategy, access the US while not paying taxes or while paying very, very low taxes in general and still getting all of the upside of the United States. So, if you're in this situation, if you're providing some kind of service and you're ready to scale up, you're ready to fight with the big boys, you're ready to go into the US market and make a name for yourself, go to rothbardgroup.com. We'd be more than happy to work with you. We welcome the opportunity to work with you, and I'll see you in the next video.